Check, please.
Hey guys, we're back here with Everything Money. Today we're going to look at Apple. We're going to show you the financials behind this company, what they're up to, what they're doing moving forward. We'll show you how we invest in a company and the numbers we look at. We'll use our software and the stock analyzer tool. All of this and more. Paul, give it to me on Apple.
Thank you, Seth. Guys, first off, before we go further, two things I need to do for me. Follow us on our Instagram, Everything Money Investing. And the second thing is take 2 extra seconds and follow Seth, Mo, and I. It really helps us out a lot. All right, so let's go to our 8-pillar software. More on that later.
Get that Apple going, baby.
Let's get Apple in here. All right, so Apple, we usually do a thorough 8-pillar process, but now we just start going to the 8 pillars more later. If you want to wait to the end of the video, Seth will show you how you can learn more about the 8 pillars. But first off, $2.8 trillion company. Remember when $1 trillion was a lot of money?
Not anymore.
Not anymore. They pay an adorable dividend of 0.5%. Eats up $14.6 billion of their cash flow. Remember, guys, dividends aren't always secure. You have to compare the dividends paid to the 5-year and current free cash flow. And as we can see from 2 lines above in our software, they can easily cover that dividend. So I doubt it's at risk. All right, let's go to the 8 pillars tab. 8 pillars tab. All right, what do we have here, Sethi?
I would assume valuation.
Yep. Our 2 X's are value-based X's. The 5-year PE is almost double our desired number, and the 5-year price of free cash flow is double our desired number. Everything else is a check mark. They've got high ROIC. Look at that, 31.7%. They've got 5-year revenue growth, 5-year net income growth. They're buying back shares. They got low debt, and they got cash flow growth in the last 5 years. Could you ask for a better company? You asked for it, you got it. Apple.
Toyota. Oh, Apple. You know, people say Paul all the time, like Apple's just one of these long-term, you just hold it, this thing's incredible. To hell with the numbers, I don't care. Just buy it, it's the best. Great. You're still thinking at the moment it's a smidge overpriced.
Yeah, I mean, well, we're going to use our stock analyzer tool shortly because remember, if Apple had growth potential that was huge, like I always bring this example. If you have 2 companies that had everything exactly the same, except one was growing 20% a year, one's growing 5% a year, which one would you pay more money for?
Of course, that beautiful growth.
Of course, 20% growth. You can overpay for growth. You can overpay for anything. Apple's a great company. Apple's got a great brand. Does that mean you buy it? I don't know. Every investment's still the present value of future cash flow. I don't care how great the company is. $1 is still $1. And that dollar of cash flow has no idea which company it came out of. It is very secular in its case. It doesn't care about anything.
Are you addicted to any company the way myself and Mo?
No.
I'm sorry. The products like Apple, literally, they come out. I don't care what they cost. I have to have all of them. The phones, the iPads, the computers. I was like hesitant on the earbuds, right? For years, never had them. Put the best damn thing ever. Noise cancellation. So have you ever been this addicted to a company?
I like Nike a lot.
But I'm talking like price don't matter.
A Rolex.
Okay, well, of course it doesn't.
Price does matter. I'm not going to buy every Rolex that comes out, but at the same time, like I like watches a lot, and for me, I just love. I think they make the best watch out there. Ba-ching.
Yeah, but I mean, it's Apple, so for normal people, it's just so ingrained. Oh, I got I got products I don't even remember. The TV, I got the Apple TVs all over the house, and now the Apple TV's ingrained in TVs that you buy new. I mean, it's just.
But I think you're more of a tech guy than I am. I think Mo's more of a tech guy than I am. Me, I just look at it as like, tech is here to make my life easier. And I think Apple does a great job making my life easier.
People are looking forward toward the Apple car that they're going to make, potentially.
Oh, it's a beautiful car. Wow, it was the, they did a prototype, and it was beautiful. So,
and of course, people are saying that with all that free cash, they should just buy up Peloton, Paul, which has had a very, very rocky last year.
So Peloton's currently like a $10 billion company. Apple's free cash flow was $101 billion last year. That means in about 6 weeks, in about 5 weeks of their free cash flow, they could buy Peloton.
So if I'm thinking, man, you got the watch, you got the iPad, right on the Peloton, it all syncs up. That'd be rad.
I love it. I like Apple buying Peloton more than I like Amazon buying Peloton. I don't think Amazon does a great job with hardware. Apple does a great job with hardware.
So with all this said, folks, I struggled with, well, now what do I pay for this company? Tesla stock is $1,000. It used to be $100. Sometimes the final stock price might not make sense to you. So we instituted this stock analyzer tool. It takes these numbers and spits out a price range you could be paying for this. Paul, get to the stock analyzer.
So guys, up here in the upper right, stock analyzer. First thing I pick is years of analysis. You can do up to 20. I pick 10. Guys, every investment is the present value of all future cash flow. If anyone tries to argue about that one, you immediately stop talking to them. I don't care if it's your parent, your sibling, your spouse. You file divorce papers immediately.
The argument is what? They're just look forward. Who cares about the numbers?
But it's still a present value future cash flow. If you get no cash flow on the way and you sell it, it's still the present value of that end selling cash flow that you get. If you buy it for $10, you get nothing along the way, and then you sell it for $30, there's still a cash flow. It's at $30 at the end. And you have to take the present value of that $30 to day one. It's still a present value of some sort of cash flow, whether it's a cash flowing business or not.
Mm-hmm.
No matter what it is, you're still, if you buy $10, if you spend $10 today, you get $30 in 15 years, there's an ROI. That's the present value of that cash flow. If you get $2 along the way every single year and then get $10 at the very end, there's a present value. It doesn't matter what it is. You buy crypto for $20,000, you still hope you get $40,000 sometime, or whatever the number ends up being.
Yeah.
It's still a present value of all future cash flow, no matter which way you cut it. Any way you cut it, it's still a present value of all future cash flow. I want you to tattoo on your ass.
I already did.
Present value of all future cash flow.
Mm-hmm.
That's all I want you to think about. And I want you to stop talking to anybody who disagrees with that because they are not very smart.
Okay.
Some would say stupid.
Go on, Paul. People love when you say that.
So, the first thing that's most important is revenue growth. Now, Apple's a very large company. In the last 10 years, it did 9.7% per year. In the last 5 years, they did 12.1%. In the last year, they did 28.6%. So it looks like their revenues is growing at a faster rate. Now, I like to buy companies where I make very conservative estimates, and I can still buy them for less than that. So you're not going to like my numbers. Don't care. Put whatever numbers you want in yourself. I get it. I get it. But my goal is there's 10,000 companies out there. Let me find the 20 or 30 that hit my criteria. So I'm going to go 4, 6, and 8% revenue growth. What's so funny, Seth? My what we call the wambulance.
I mean, you don't read the comments, but you already know what they're writing below. You're too conservative.
Yeah, I am.
Because I see minimum 9% growth. I'm like, bam, 9, 12,
Somebody the
15.
other day, and I love them, but somebody the other day said, Paul, you're going to love my assumptions. And they had 18% revenue growth in there, and I had 8. And I was like, okay. All right, profit margin. Let's say they want to grow, so they're going to decrease their profit margin a little bit. Let's go 21, 22, and 23. Free cash flow, I'm going to do the exact same numbers. Actually, free cash flow should be 23, 24, and 25. PE, ready to hate me?
70, 80, and 90?
Yeah, 14, 16, and 18, which I still actually think is aggressive.
A little different.
And 12.5% return, desired return, because guys, you can get 9 or 10% by owning an ETF. So in order to buy an individual company with margin of safety, put in a higher return.
I've been seeing more and more of this, Paul. I comment on people when they're weird. How would I say this? When I can recognize people are new or they're making silly assumptions moving forward, I just go straight to, you should just buy an ETF. Like, you actually told that to me. Like, you don't think at times I can handle the swings of investing, and I'm learning that maybe I can't. Sometimes I'm even looking in the mirror and saying, you know what?
Well, we did day trading today, and did you handle that pretty well?
I think it's stressful at times, you know. By the way, if you're in the Bidnest Nation, you can join Paul and I and Mo. We're going to get a more set schedule, but we are day trading live with you. Mo and Paul are teaching me and vice versa how to day trade. We had, how many people do we have on today? 75 people joining us?
I think I saw a peak of like 78.
Yeah, it's very nice. But, it's a little stressful, but anyway, keep going, Paul.
Oh, I don't find it stressful at all.
Oh, yeah, you were finding it fun.
What I like about it is we have 75 people watching stocks for us. I say, what is everybody seeing? Because we have certain parameters we hit.
Yes.
80 stochastic, 20 stochastic, engulfing candlesticks volume. And so instead of me watching 3 or 4 stocks, I have 75 people each watching 3 or 4 stocks. So when one hits, it's like, I think I entered at 1.6 companies at one time today.
Yeah, I could feel the candlestick in your pants. Keep going with Stock Analyzer here.
So hit the analyze button. Guys, our middle price is 80 to 90.
Still too
our high
hot.
price is low ones. Our low price is 60 to 70. So what does this mean? It basically means to me that Apple's probably a little rich at this point. Now, where would I buy Apple at? I actually have puts on Apple at 120, which means if Apple falls to 120 within the next, I think it's 5 months, I get the shares at 120. I'm okay with that because I do think that Apple's probably somewhere between these two.
Yeah, and let's clear this up, folks. Paul, you said this on our Facebook videos, and then when Facebook fell, they said, Paul, you're an idiot. That stock fell. And I'm thinking the whole time you said, I'm selling puts at $250 when it was well over $300, which means you did want to acquire it at a much cheaper spot. So when it got there, it made sense. So be wary, folks. Paul's not saying Apple is a buy, but if it falls much more, it could be in your wheelhouse. That's obviously why you're selling puts and trying to make money in the process. So
yes, correct. So that's what I'm doing here. Apple's got a great balance sheet. It's got a great brand. I think Apple's going to be the blue chip company of the future. But unfortunately, with blue chips, they don't have much sexiness to them because they're boring. But they're going to keep buying back. I mean, look, they've already bought back 21.6% of their shares in the last 5 years. They're going to keep doing that. Now, when am I going to buy Apple at 175? No. Could that end up being, guys, this stock could go to 300, 400. I don't know where it's going to go. But the bottom line is, if I follow my process, that's been proven time and time again to work in the long run, I will miss the high flyers that don't make sense, but I'll find the companies that do make sense, that do very well.
And that's just it. I mean, that's the gist of the channel is you can almost cover up the name, which we do in our blind stock reaction videos, is just cover up Apple, see the financials, and start making a brief intro decision there. And then if it has a great brand, it has plenty of free cash, it's ingrained in our lives, I guess you can use those to start talking yourself into this buy, maybe paying more. That's what we want you guys to kind of avoid doing, right?
Well, but there are times when paying more is okay. And if you think, I mean, is 14 a reasonable PE or price of free cash for Apple? I don't know. These are all areas in which, look, if I change...
I was just going to say, change some of these to make me buy this right now.
7, 10, 13. Still not there. That's how I know this is overpriced. Even with my rosy assumptions of 13% revenue growth, which they haven't even had in the last 5 years, it's still not a buy. With 18 times earnings, I'm sorry. It's not a buy at this price.
Damn, I want it to be, though. It's so great.
It's a great company, but it's not the right company.
Okay, we're going to cut into Mo. Mo is on a location in Florida, soaking up the rays, and he's going to get to Apple trading. Go ahead.
Apple, everybody knows I'm an Apple fanboy, and this is one of my favorite stocks to trade. And it's great because it's actually in the Employed Trader series, because it's a stock that I trade frequently, and it's a stock that gets really nice long trends on the long-term stochastic. I can also go in and swing trade it, which I'm actually doing right now in the Employed Trader series, and I can go in and day trade it because it does get that day-to-day volatility that happens as a FANG stock and as a tech stock as a part of the NASDAQ. So what I I'll show you what we're doing in the Employed Trader series. We did catch it. We actually caught it back in, let's see, where were we? It was this time frame in the summer. We caught this really nice stochastic, really nice run up into these, what were all-time highs on Apple, and we caught a little bit over here in September. Now, also, we caught a little bit of this run in here. It wasn't as great of this was back an 11% gain that we had back here. This was a little bit smaller. I think it was maybe 7%, 6%. I'm not 100% sure, but we did participate in that. And you notice back here, the stochastic was a little bit wonky. This, in the summer, we had a really nice separated stochastic that went on for a very long period of time. Now, I will give everybody who's not in the bid and ask a little tip of what we're doing in the bid and ask. So right now, we are involved in a swing trade on Apple, and what a swing trade is basically a 5 to 10 day trade, 1 to 10 day trade, where we have nice movement through the sweet spot, nice volume coming into the stock. We had an engulfing candlestick that we purchased on, and we moved on from there. So right now we're up minimally in the position, but this is exactly what you're looking for. You're sitting in, you add on a nice area of engulfing, then you're consolidating for a little bit. The trend is fine. We're still over 80%. If we can just get this trend to move up with our red line, we're going to get some movement up on Apple. And we're going to probably test into these all-time highs of 180 again. So that is exactly what we're doing now. Now, the other good thing that you can do on Apple is day trade it. You notice that here, actually today, you had a very nice day on Apple. You were above 80% for a very long period of time. You had great volume coming in, excellent engulfing candlesticks, which were buy signals on the way up, and you had your sell signal right in the afternoon, maybe about 2 o'clock. Also, this was on, what day is today, Wednesday? No, this was on Friday. Very nice trend, very nice add point right here, and you had a really nice 30-minute run on Apple. So Apple is a stock, remember, it's a FANG, it's one of the FANG stocks, and it does have daily volatility. So if you want to, this is a great stock that you can throw into a portfolio for trading on basically any chart. But if you're looking for long-term stocks, if you're a long-term trader, this may be a stock that you can put in that long-term portfolio.
Hey guys, Seth here, jumping in real quick. We'll get right back to the video, but I want to let you know you can join our software. You can get access to this financial data and the new Everything Money chat right in your phone. Paul will tell you how to get it right now.
So guys, we created the software because our users wanted to be able to analyze their own stocks without having to wait for us. So we put hundreds of thousands of dollars, made the software. You get 30 years of financial data. You get access to Seth Moe and I, 8-pillar analysis, the stock analyzer tool, the retirement calculator, and you get everything on this main page that is coming soon. This is all included. And if you look right here, these are all the things you get. You get everything on a mobile phone. Everything we're talking about here is ready, available on your mobile app. One app for everything. But most importantly, guys, you get our Discord, our community of, now it's off of Discord. It's right in our app. You get a community of over 6,000 people you can talk to every single day about your investment ideas. If you're like them, you felt alone having these ideas about investing that weren't reciprocated by others, but now you found the community here. And this is all available for only $1 per day. Less than a cup of coffee. If this can make you 1 or 2% or save you 1 or 2% of losses every year, it will lead to hundreds of thousands, if not millions. $1 per day, 2 ways to sign up. Everythingmoney.com or Patreon. The benefit of everythingmoney.com is we're not large enough yet to charge sales tax, so you won't be charged sales tax quite yet. And look at this, guys. You get all of this. Our competitors are a lot more money and don't provide as much. $1 per day. Go sign up now.
So Paul, in the end, what should I do as an interested person in Apple? I gotta wait, right? It's just not the time.
Yeah, I mean, if you're looking at, our goal is whenever we look at a stock is if I had this company 100 times this price in some shape or form, whether it's this company or if I had 100 companies like this, would I make this investment? If you made this investment, your returns are gonna be lower than, does that mean that every single time I say no, it doesn't mean it's a good, no, it just means be cautious, wait for better times, they will happen. And if you had 100 opportunities to buy a company with similar attributes to this, you'd be better off waiting.
We'll see you in our community. Final thumbs up on the way out. See you next video.